The International Monetary Fund, or the IMF, thinks we are headed towards a global recession. They have lowered their growth projection to 3.2% in 2021, which is almost half of a percentage lower than their April estimate. The global economic report presented by the World Economic Outlook stated that the pandemic has laid the groundwork for never before imagined economic distress. It has not only redesigned people's finances, it also pushed a dramatic change in corporate culture. People have discovered the comfort of working from home or not working at all. That has affected productivity in companies, which in turn affected supply. In the meantime, the stimulus has armed and inspired people to spend more, creating a severe imbalance between supply and demand. The Ukraine-Russia conflict has also presented supply problems. G7 countries have already agreed to ban products from Russia, including oil. That ban has slowed several industries down. Right now, the number one priority is to tame inflation, but that could lead to real economic costs, including a global recession. The report stated, quote, "The risks to the outlook are overwhelmingly tilted to the downside. The war in Ukraine could lead to a sudden stop of European gas imports from Russia. Inflation could be harder to bring down than anticipated, either if labor markets are tighter than expected or inflation expectations unanchor. Tighter global financial conditions could induce debt distress in emerging market and developing economies. A plausible alternative scenario in which risks materialize, inflation rises further, and global growth declines to about 2.6% and 2% in 2022 and 2023, would put growth in the bottom 10% of outcomes since 1970. According to the outlook, inflation is expected to have the most significant impact on the world economy in 2023. The IMF said that global inflation is anticipated to reach 6.6% in advanced economies and 9.5% in emerging market and developing economies this year, upward revisions of 0.9 and 0.8 percentage points, respectively. In 2023, disinflationary monetary policy is expected to bite, with global output growing by just 2.9%. Despite still expecting positive economic growth, the future remains uncertain and highly dependent on how various economies react to tighter monetary policies. IMF's chief economist Pierre Olivier said that the world may soon be teetering on the edge of a global recession only 2 years after the last one. The apprehension is that risks listed by the IMF in April are materializing. These include a sudden stop of European gas flow from Russia, stubbornly high inflation de-anchoring future price expectations, a surge in debt stress due to tighter monetary policies, renewed COVID outbreaks, rising threats from food insecurity, and geopolitical fragmentation. Looking at the outlook, country by country, the IMF's downgrade to the U.S. expansion was one of the biggest. The U.S. is now expected to grow 2.3%, which is 1.4 percentage points lower than the April forecast. All this points to a coming recession. And the question is, are you prepared?